Hey, can everybody hear me? Awesome. How's everybody doing? We're gonna get started in a little bit. Give it about a minute or so. All right, so we're gonna cover a few strategies that I've used in the past. Some I still use to this day, and I hope that you guys will be able to adapt to these strategies as well. You don't have to use them, but they do go hand in hand with the squeeze. And so, with that being said, if you're looking to trade a squeeze play, then these could also be beneficial to your arsenal. All right, so we're going to go over selling premium. Uh, we're going to go over the iron condor, the squeeze iron condor, and the squeeze straddle. I know that you guys have probably already touched on these a little bit, but I just want to make sure that I go a little bit, talk a little bit more on the squeeze side of things and how you can capitalize on these strategies. But I really want to focus on selling premium because I don't think that enough people, enough traders actually know the advantages of selling premium. Just by show of hands, yes, or you can enter your answer. The market is a game of blank. Can anyone tell me what I'm missing? It's all about what in the market. What are we looking for? Yes, awesome. Probability. The market is a game of probability. That's really what it is. Yes, supply and demand, that's also true. That's essentially what makes up the market. But the market itself is pretty much based on probability. So we're gonna play a game. Let's use our imaginations real quick. But be serious though, mindful. Let's say that we have a golden pot for let's say $500, right? So if you let's say that we're going to give you $500 if this outcome, if you choose the right outcome. Let's put it like that, right? So let's take we have Tiger Woods here, and we have a picture of a pond, right? For $500, are you going to bet that Tiger's going to hit a hole in one, or would you be willing to bet that Tiger is not going to land in the pond? Show of hands. Let me see. Let me see what you guys are thinking. Won't land in the pond, right? You guys are going with the pond all day, right? Anyone going for the hole in one? higher probability, right? That's like almost a no-brainer, right? All right, let's try it again. Let's try it again. See what you guys are saying. All right, let's do another one. Let's do another one, right? So for $500, are you willing to bet that, let's say that the Ravens, let's say that the Ravens will kick one field goal in the entire game. You get you get $500, or they win by 30. Which one are you guys gonna go with, right? Let me see what you guys say. Why the field goal? Someone tell me why the field goal. Why are we going for the field goal? Why not 30 points? You guys don't think that they can score 30? Higher chances, right? Probability. Dominant like crazy, right? Exactly. That's what I'm looking for. I'm going with you guys. I'm going with the field goal too. I'm putting my money on that field goal. Odds are definitely stacked in your favor. Let's try this again. Let's say for $500, we're going to bet that this guy hits 7 threes in a row or won't shoot an air ball at the free throw. What are you guys going to go with? I don't know. This guy looks like he got, look like he got a form right there. Look like he might hit 7 free throws, 7 threes. No air ball. Klay Thompson he is out of this world. But if we're going with probability, I think it's safe to say most of us are going to go with won't shoot an air ball, right? So where am I going with this? Right? Where am I going with this exactly? I'll tell you what. We're looking at higher probable trades, right? So we're going to sell premium. Can anyone tell me what out the money contract, like essentially what was it designed for? Like what is it designed for? Like what is it essentially? Give me some answers. What is an out of the money contract essentially? Like what is that? Can anyone give me an answer? Speculation to reach later maturity, low cost, low term. I'm seeing a lot of great answers. Speculation for poor people like me. No, no, no. Chances of hitting strike price or longer term. Okay. I'll tell you my view of it. An out of the money call or put is basically a lottery ticket. Think about it. Think about it. Think about think about by show of hands, how many of us have bought an out of the money contract and it expired pretty much worthless? Or you had to sell for a loss? Be honest, be honest. I want everyone to be honest here. We've all taken losses now. There's no one in trading that hasn't taken a loss. I don't care what you say. Okay. Seeing a lot of hands, right? And we're talking about out of the money, right? You've bought an out of the money call or put, and it expired worthless, or you sold it for a loss, right? And why is that? Why did you sell for a loss? Expired worthless all the time before TCX, right on. IV crush. What if I told you that you could make money off of shorting those out of the money contracts, right? Literally, guys, you could literally make money instead of you buying those lotto tickets, because that's what those essentially are, right? That's why they make those, because the probability of that contract landing in the money is not so great. The probability of it is not so great. Aside from a catalyst of some sort, right? Because you get news. I mean, news can change almost anything, right? But we can't see the future. But just from numbers, those out of the money contracts are basically lottery tickets that people buy, right? So let's just sell those and let them expire worthless and collect the premium. Has anyone heard the word premium decay? Show of hands. Anybody heard premium decay? You guys are in TCX. I know you've heard of premium decay. Yes, theta, right? Those contracts are designed to literally, they're designed to just expire worthless. So we're going to take advantage of that. We're not going to let that slide. We're going to seize the opportunity, and I will show you how. So here we have a chart of Tesla, right? This is Tesla 4 hour. By the way, how many of you traded Tesla today? Anyone trade Tesla today? Anyone make money off of Tesla today? Did anyone lose money off of Tesla today? Be honest. I want everyone to be honest here. Be honest. Lost bread on Tesla. I'm sorry to hear that. It happens. It happens, but I tell you what, we're gonna do something about that, right? These strategies that we're gonna be talking about tonight are especially sensitive to small accounts. How many times have you guys looked at a ticker of stock, whether you were trading stocks or you were doing options, and it was just too expensive? Let's just be honest. Like you just looked at it. I do it all the time. I look at stocks and say, man, this stock is high. How many of us have looked at tickers that were like, do I really want to do I really want to risk this much? How many of us? Show of hands. Happens all the time, right? That's risk management. That's good risk management, though. It's good risk management if you are accepting that. So great job there. Well, I'll tell you what, these strategies will allow you to capitalize even with a smaller account. And I'm going to show you how. So once again, this is Tesla pulled up. I took this right after close Friday, right, of Tesla. And I said to myself, I took a calculated observation. And we've been watching Tesla for some while now, waiting for this move that happened today, right? So I said to myself, this 820 level here, can everyone see this 820 level that I'm pointing at right here? Okay. Everybody see that? We can see that. Okay, awesome. Just making sure you guys are with me. I said to myself, okay, check this out. Look how many times we've come to this level and we've rejected, right? And I said a break above that level, could offer us a chance of, what am I looking for? Once you break a level, what has that level, or once you break a resistance, what has that resistance now turned? Anyone tell me? Once you break resistance, it turns support. Exactly. Right. So I said, okay, what if I short these puts, these 820 puts here, right? All these people that are buying lottery ticket, these 820, look how far away this is. And this was Friday, right? After Friday close. All these people are buying all these lottery 820 puts, just throwing money at them that are more than likely are going to expire worthless. You have Tesla here, in a squeeze, on the crisp of releasing from a squeeze at the time, right, throughout the day. Why not just short these 820 puts? So come expiration, now what does that mean? I'm shorting the 820 puts. Just gonna click over real quick. And here I have one of my Tastyworks account pulled up. Also trade on Tastyworks at times. I have multiple accounts. Uh just to state, these trades, you need a margin account. Um, I know people are like, oh, I have a cash account. Um, I think actually that it's great if you have more than one account. I don't want to like just go on a tangent and say, yeah, get two accounts. But I think that it will do you some good, and you can actually grow your accounts quicker if you use multiple accounts, right? I'm not saying like three or four. I'm just saying like two. Have a margin account, and yes, if you have a margin account, you're going to be limited to the 3 day trades within 5 consecutive trading sessions, right? Take those as growing pains, right? Because sometimes it's great for you to only have 3 day trades within 5 consecutive times. Just show of hands, like how many of us have over traded? You've been up, maybe you've been up and you've over traded, right? You went back in wanting some more profit, and you over traded. You saw something look nice, and it didn't. It ended up not working out the way you actually gave back profits, right? So sometimes that PDT rule can be of great use. And by the way, PDT rule is if you have less than $25,000 in your account, you can't day trade more than 3 consecutive sessions. But so this allows us to position ourselves on the opposite end of the spectrum, right? Because even if you were to let's say that you were to get in calls, right? Because I know there's times where we've gotten into calls and things have moved in our way, but it didn't move in our way quick enough, right? Well, with this, we're taking that out of the equation. We're as long as Tesla does not close below 820, you receive max profit. Now let's just look at that for a second. Just bring back up Tesla. One second, guys. All right, let's just bring back up Tesla, right? So we're saying that as long as Tesla does not close below this 820 level, we will receive max profit. Now, would you guys be willing to bet about $200 that Tesla Friday wasn't going to close below 820 within 7 days? By show of hands, how many of you guys would have went with that bet? Be honest now. Be honest. Okay. It's pretty safe to say, with everything going on, if you follow the flow algo or any kind of flow sweeps, I mean, they're just tagging Tesla. Tesla's been in the news for the past like month now. Just like every day there's something new about Tesla, right? And if you look at these charts, you look at these levels, look how many times we've come down to this 810 level and we bounced, right? We bounced towards the 840 level, right? So, you know, this is a pretty high probable trade, right? So let's check this out. So Friday, Tesla was at 835, and I came in and I said, okay, I'm going to short Tesla at 820. So I'm going to sell the 820 puts. I'm going to buy the 815 puts for protection. So basically, we're getting a credit for these expiring worthless. We're going to collect the premium. Go back to Tesla. So we're collecting the premium right? All of these lotto out of the money puts that were created, they're going to die off eventually, right? That's what happens. They wither away. But while they're withering away, we're collecting that profit. That's all that we need. We don't even need Tesla to move or to hit 900, right? You don't need a stock to particularly move in a right direction when you're selling premium. Now you can do this on puts or calls. You could very well come back and say, hey, I'm going to short the 840 calls, basically saying that Tesla's not going to close above 840, right? But we're not looking for that because Tesla is showing bullish momentum. Check out the squeeze. By the way, what color is the bullish momentum histogram bar? Can anyone tell me the color of the bullish histogram bar for the squeeze? Light blue. Yes. What about the bearish colors? Uh, yes. So the lack or loss of momentum, I should say, the loss of momentum from the light blue, dark blue. Correct, correct. Yes, dark blue. And then from there, we have the red for the bearish and so on and so forth, right? So we're showing bullish momentum here. So our job is to come in, and when you're wanting to sell premium, all that you need is for this ticker not to close below that level. I mean, it could even close at 820 10, 820 15, right? And you still collect some type of premium. That's how crazy this is, right? So this thing could get strategic, right? If you begin to equip this with, let's say what I did today, I I bought naked calls. I bought naked Tesla calls. So here you could short these 820 puts, collect premium there, and ride this up naked calls, right? And still collect profit. So you're winning on both ends. You got a high probable trade and you're playing it to the upside. Now you don't have to do that, but that's just another strategy that you could also equip with your arsenal. You got some questions? No, it's not going to be the same. But you be pretty good in there. I mean, you're still making profit. Yes, this is selling premium spreads. This is selling put spreads, selling call spreads. That would be the actual term for this strategy. It's their credit spreads, which is why you need a margin account. Your broker is basically. Let me just go over to the next slide. So here I sold the 820 puts and I bought the 815 calls. So this is what this will look like if you guys actually take a trade similar, or if you would have taken this trade, right? So the max loss that I can receive is $272, right? Just think about it. Tesla was at like $800, right? It's only costing me like less than a third of that, right? Almost a fourth of that to trade it, right? And to potentially make $227. That's almost 100% profit on this high probable trade. And it's only, think about, like, look at this, guys. This is only one contract. You can buy as many, as your account, as much as you have in your account, because the brokers they're gonna front you some money for a high probable trade. Like, that's how this works. So, definitely we just look at some questions. Yeah, this is going to be your max your max loss, period. Like, this is as much as I can lose on this trade. This is it, right? I get to trade one of the tickers I love most, Tesla, right, for $272 max loss. And as long as Tesla does not close below 820, let's just go back to that. As long as Tesla doesn't close below 820, I receive almost 100% profit, right? Now imagine if you bought, I don't know, let's say you would have bought two of those, right? That would have been almost $500 of profit just off of, you making a high probable trade. And let me just add, you don't have to just base this off of levels. This is what I'm going to tell you guys. A lot of people won't tell you, right? I'm going to show you guys something real quick. I'm going to go a little off. Just go a little bit off, right? I'm going to show you guys something real quick. Show you guys something that a lot of people probably won't. They're not going to show you. This is what you guys pay for. This is what you guys want. So I'm going to show you everything. Can everyone see my Thinkorswim platform? Could you sell those types anytime too? Here's the thing. Technically, yes, you can sell these. You can go in and sell these at any time that you want, but you want to be strategic, right? You want to be aware of your market. You want to be aware of your surroundings. You want to be aware of the market that you're in, right? Different stages of the market require different strategies at times, right? So let me just pull up SPY real quick and I'll go back. I'm not gonna go on a tangent. Let me just show you something. And then we'll get back to what I was talking about. Right. So you're selling premium, right? And let's just say, and you can do this on a bullish side, on a bearish side, it doesn't matter. Let's just say that you're using the squeeze to your advantage, right? Because let me just tell you this much. When you are selling premium and tickers that are squeezing, guess what? You're getting those contracts for a very, very low price. Why is that? Why is that, guys? Why are prices so cheap when tickers are in a squeeze? Low volatility, low IV, price not moving, low momentum. Yes, yes, yes. This is why this is so amazing, because this indicator literally tells us when stocks are basically on sale. Essentially, it tells us when tickers are on sale, and it's our job to do our due diligence to figure out possibly if the market is in a directional move. So if we potentially have bullish momentum, let's just say here, right? SPY squeezing, and we're breaking this 292 level. It was, right? It's safe to say that we're probably going higher, right? You could come down here and sell these 289s, even your 287s, and as long as SPY doesn't dip below that, then you're fine, right? If you have a directional market, you want to do this in a directional market, uh, or even a market that is moving sideways, right? Because as long as it doesn't close below your level, you're fine. You don't have to worry. See, I'm gonna take the worry out of trading temporarily for you guys, right? With this strategy, you're gonna have to worry less. You're not gonna have to. Just show of hands, how many of us have had to have enter a trade and literally just sat there and watched that trade to see what's gonna happen next? Because let's just be honest, if you're in calls in this market right now, you kind of got to watch what's going on. You can't just get up and just leave. I mean, you can, but you know, all the time, right? This takes the worry out of all of that. I'm not going to say all of it. I'd be lying if I said all of it, but it takes the worry out of a lot of that stress. It just takes it away from me because this thing can do whatever it wants to do, right? It could go up, it could go down, it could touch, it could bounce off. As long as come expiration date, that Friday, whatever date that you chose, you receive max or close to max profit. Take some questions. How often do you look at the chart? By look at the chart, what do you mean? What do you mean by how often do I look at the charts? Like when I'm in a trade or when I'm just looking at the market? Can you get assigned with this strategy? What does that mean? I'm just gonna answer some questions. Oh, wait. So let's say it went under, but it's not Friday yet. As long as it closes above the number you collect the premium. Correct. It could go down, it could go up, it could go sideways. It doesn't matter. As long as it doesn't close below that level, you're going to collect, if not max profit, you'll collect, a good chunk of profit, you know. And I just want to add, remember, I never seen a man go broke taking profits. I don't want to hear anyone from this course trying to hold on for max profit, right? Because I'm going to go back to Tesla, and as you guys can see, Tesla is nowhere near 820, right? So if I had woken up to, let's say, 90% profit, there's no need to hold on for more, right? No need. There's no need to try to hold on for more. If you hold on for more, you're going to pick up bad habits, and it's not going to always work in your favor. It's not going to be pretty when it doesn't, right? So I don't know about you guys, but I'm willing to take 90% profit all day. I'd be willing to take a 30% profit on the table. If you do this, just think, guys, compounding your gains. If you literally do this once a week, let's say you did this once a week and you nailed this Tesla move, right? For 250 bucks or so, right? If you do that once a week, guess what, guys? That's $1,000 in your pocket a month. That's $12,000 a year. One simple high probable trade that we just took right there. So there's no need to hold on for more, and you can do that with 30%, 10% even. Answers a couple of more questions. What happens at expiration? Do you need to exercise the bought call? No, they'll exit out it for you. They'll do it for you. But there's no need to hold on though. I've heard some crazy stories about people's contracts getting exercised. I haven't seen one in this instance, like using this strategy. But if come expiration, if it's just this, it didn't go in your favor, don't just let it close on its own. Just close it out. Just take the loss, right? That's what it's all about, is knowing when to cut your losses at the end of the day. That's how you're going to remain probable, because you're going to take losses. You just have to know when to cut your losses and when to move on to the next level. Somebody said, which delta you choose, less than 30 delta. I'm so glad that you asked that. And I'm gonna cover that. That's actually where I was going with all of this. A lot of people won't tell you, but let me just pull this up real quick. Let me show you something. Show you guys something. So I have my option chain up. This is Tesla. Okay. So there's actually an algorithm, right? A lot of people ain't gonna tell you, they're not gonna tell you this. There's an algorithm that pretty much tells me the highest probable chance that a contract will expire worthless, pretty much. And that would be delta 10 on both sides. So you come here on your put side, that would be a delta 10, be this 815 contract. And here on your call side, you would be looking at your 1010s, right? That's your highest, that would be your highest probable contracts to shoot for. Now, it may not be the most rewarding contract per se, but as far as probability goes, that would be your best bet. Now, the closer the contract is to the price of the stock, you're going to make more on that contract. That's just how it goes. But we're not aiming for stupendous gains. We're aiming for consistency. We're aiming for probability. And if you continuously, you know, put probability in your favor, then you'll stack these gains sure enough, right? And when you get these explosive moves like Tesla today, you can actually start shorting more in the money calls, because when buyers are stepping in, that's when you guys are starting to incorporate level two, right? When they're stepping in and you see that that is a level that buyers just want in. They gotta have that price. How many of us attended last session? Just show of hands. How many of us attended last session or saw last session's level two? We all following along with what I'm saying right now? You can literally incorporate every single thing that I'm teaching you guys into every single strategy that I'm showing you right now, right? That's why I stress how important level two was, right? You can literally go in, guys, and I want you guys to start going in. It's going to take your own due diligence. I want you to go into on demand and just start looking at levels. Look at what happened to buyers at a certain level or sellers at a certain level. Look what happened to them. Look who took over at certain levels. What levels are important? What happened when this price hit that level, right? Write notes. Everyone should have a journal of some sort that should be, you guys should be taking notes like every single day. Like literally, I have like 5 books next to me of just journals that I've just written over the months, right? Sometimes I still go back to them and I look at crazy things that happen and I compare them to what's happening now. And I see how I traded and what I did then and what am I doing now, right? You guys need to always be recording what's going on in these markets and in your trading, most of all. But yeah, if you choose these Delta 10, then you'll be fine, right? Um, I don't always go with the Delta 10, but that's definitely a level. That's definitely a number that you want to keep in mind. Um, and I'll show you tickers. Let me just show you guys. I'll show you guys another ticker in a little bit, and some other strategies I got for you. But essentially, this can be a very, very, very critical tool that you can use in your arsenal. Just go back. So I'm gonna go back to I think we're in Tasty Works. All right. Can everyone see my Tasty Works screen? All right, I got someone asking, what do I mean by delta 10? So, are we familiar with delta, gamma, theta, all those? I'm not talking about a fraternity or a sorority. You guys should be because I know for a fact that Kevin discussed these. And if you haven't, he's recorded these for you. So let me just go back over to Thinkorswim real quick. Just for time's sake, we're just gonna show you this. Okay, so over here I have my option chain showing me the Greeks. So what these are called, the delta, the gamma, the theta, these are your Greeks, right? For your delta, you want to come over here and find the delta 10s over here for which is correlating to the 820 call or puts. You got it? Awesome. Delta 10. Okay. All right. So let's get back to Tesla. Okay, this isn't the slide. That's why it's doing that. Okay. So, show of hands, how many of us would have took this trade? This shorting the 820, right? Guys, you can literally do this with any ticker of your choice. Any ticker of your choice. I have a question, but then why don't people just sell super high expiration and buy multiple for 0 days expiration? So you're essentially saying, are you asking why not buy 0 day expiration contracts? Are you looking to buy those naked? Oh, you can do same week. I guess he's asking why did I choose this expiration date? I mean, essentially, the farther out you go, you know the more you're going to have to put on, right? That's just the more time, the more expensive the contract's going to be. That's the way options work. I just did this for demonstration purposes, but I can almost assure you that those puts are expiring, if not worthless right now. They're pretty much worthless. So and you don't have to wait till expiration to close these contracts, guys. Like that's just like you buying a naked call or put. You don't have to close that. You don't have to take profit at that expiration date. You can take profit whenever. I've literally put on a put spread on SPY and it shot up and I was up like 50% in 1 day and I took profit. Like why not take profit? Why, like that's what we're aiming for. High probable trades. You're aiming for percentages. Step away from trying to access dollar amounts. I want to nail $100 a day. I want to make $1,000 a day. Get away from the dollar amounts, right? Because at the end of the day, it's all a percentage, right? Because 1% of 100,000 is $1,000, right? If you're trading with $100,000 account, you only need a stock to move 1% for you to make $1,000. That's all it takes. The bigger the account, the less percent you need. So I want everyone to start thinking in a sense of percentages. Yeah, I mean, this is definitely a game changer. This is just one, right? And we're gonna look at ways to utilize this put spread. So let me just take out a couple of examples because I really want you guys to see firsthand how you can start using these squeezes and start collecting premium, right? Check out SPY. Let's just check out SPY on the daily. Let's check out SPY on the weekly first. So let's see, daily. Okay. So here in March, between March and let's say the whole month of March, probably wouldn't have been a great time to sell premium. Why is that? Anybody tell me why it wouldn't have been a great time? Chop, no squeeze, no squeeze. So you guys can literally do this strategy whether it's in a squeeze or not. The thing about the squeeze, what helps you out, think of it this way. When you have a ticker squeezing, what does that mean essentially? Someone tell me what it means when a stock is squeezing. And I'll tell you why why it helps you. Consolidation, indecisive, you're waiting, right? Consolidation is just basically sitting there. It's moving in a range, essentially. That's what a squeeze is. Stocks are when stocks are in the Kettler channels. So if you have a stock that is barely moving, right, you have a higher probability of that stock not making a big move, right? So if let's say SPY is right here, it's ranging between 292 and 297, right? Like $5, right? It's probably safe to say that it's not going to make a drastic move to like 286, right? Maybe even 289. Probably won't move above 300, right? At the time, we didn't really, right? So you're taking a higher probable trade. You're like with the stock consolidating, you don't really have to worry about it moving 5, 7, $10 into your target zone because it's hardly moving at all. That's why this and the squeeze tells you this, right? Let's check out some tickers. Let me just show you guys. I'm a visual learner. I have to see it, right? So let's look at EA back in it's a while ago. We, we have been watching this stock for a while. We have been waiting for this breakout. But just check this out. Let's just say that you wanted to short the 85 puts, right? So we're basically saying essentially, let me just draw a line for everyone. Essentially, we're saying that is we're going to sell the 85 puts and we're going to buy the 84 puts for protection, right? It's like a hedge. We're going to collect the credit from these puts expiring worthless, right? Look how long EA consolidated for in this squeeze, right? Look at it. We're checking out a weekly squeeze. So just like how a squeeze can move for 8 to 10 bars, it could very well squeeze for 8 to 10 dots or so. Like bigger the time frame, bigger the move. If a stock is squeezing on the weekly chart, guess what? It's probably going to rally for weeks too, Check this out. You see that? You guys see that release from that squeeze? How it went from consolidating to just on a tear? Imagine shorting all of these puts week after week after week, collecting guaranteed money almost, right? You guys wouldn't even have to worry about watching the market. You could literally come in here and find tickers that are squeezing. And we're going to talk about how to find tickers that are squeezing. I'm going to give you guys the blueprints to my scanner tomorrow on next class. But you can literally come in here and find tickers that have been squeezing, that are squeezing, right? Look at Netflix, right? For a short period of time, it's squeezed. Let's check out, let's just check out some, let's check out, look at calls squeezing. Trade in the range, right? That's why timing's so critical. Could literally be shorting these 292 puts, right? Every time we've come down to 292, we bounced off that level. Or you could very well say that, you know, you could sell these 325 calls, sell these 320 calls if you like, you know, but just looking at the squeeze currently right now, it has bullish momentum, right? And let's look at the bigger picture. Kind of in a kind of pattern is this, guys? Anybody see this? What kind of pattern is this? It's a triangle. I'd be taking notes of this if I were you guys. I don't know if you guys are taking notes, but I would definitely be marking this down in the books, right? We got a weekly squeeze on cost. It's in a triangle. Now remember, these squeezes work best when they're what? Somebody fill in the blank for me, please. Squeezes work best with what? Patterns at key levels, that too. Yes. Price action. Yes. You really want to see a squeeze when you see a pattern, or you really want to see a pattern when you see the squeeze, vice versa. When you see these two come together and you use level 2 in price action, as well as following the market, of course, you have a great shot at capitalizing on these major moves before they happen, right? Something's about to happen clearly here. Let's check out SPY. When I actually started using this strategy, where were we? We were here. It's around the time I first started trading with Kev. So we were here in October, right? I saw we were squeezing. And momentum was starting to pick up to the upside. So I shorted these puts. I shorted the 297s, the 292s. I shorted everything up under every time we broke through a key level, or we broke through a level, another high. Anytime we had a dip, anytime we dipped, we took a dip. I bought that dip, or rather I sold that dip, you could say, betting that we would edge higher based off of the squeeze. You see, do you guys see what happened after we released from the squeeze back in October? We already know what happened, right? Broke all-time highs. Imagine getting in on that. Imagine writing contracts, selling premium, selling out the money puts that are going to expire worthless, right? Those lottery tickets. I'll sell a guy a dream all day if he thinks that, you know, this thing's going to drop 20 so dollars or so, or $10 or so, some crazy lotto out of the money play. I'll sell him a dream all day long, and you should too. You really should. You should sell them a dream. Sell them that lottery ticket, because guess what? The odds the probability is stacked in your favor, especially, right? Because market makers haven't caught on to this indicator, guys. The squeeze is a hack. It's literally a hack. They haven't caught on to this, guys. We're literally giving you gold right now, right? I mean, how many of you have ever seen anything like this, right? Dream seller, I love it. Yeah, sell them a dream all day. Sell them a dream all day. Come in here and start looking at these charts and finding key levels that these tickers are, either A, bouncing off of or rejecting, right? And sell those people a dream. So let me get back to the presentation. Went on a little tangent right there. All right, so I have SPY pulled up, right? We were just talking about SPY. Again, I did this a little after close Friday. I literally wanted to show you guys these scenarios because I calculated in my head what could happen, right? What could happen just for you guys. I wanted to show you guys this, and we all see what happened today with Tesla, with SPY, right? We would have banked, right? So I said to myself, let me sell these 300 puts, right? Because we've been ranging for a while, right? It's safe to say we've been ranging in this area for a while. So I said, all right, let me sell these 300 puts. Now, it's going to cost me $74. That's how much I could possibly potentially lose on this play. But let's say come expiration, if SPY does not, if SPY winds up being greater than 299.74, which is pretty much where I'm selling at that 300 level, right? I receive max profit, right? That's still like, man, that's like 35% or so, 33, 32% on your money. That's great. That's one contract. Imagine if you bought five. Ooh. So for 375, guess what, guys? For $375, I'm basically saying that SPY isn't going to close below that 300 level because look what happens every time it hits that 300 level. What happens, guys, every time? I'm not saying that this is going to continue to happen per se, but just based off of historical data that I'm looking at, what's happened? It's bounced. They bought it up. Why not 290? You can sell the 290s. That's more that's actually a safer bet for you, but you got to think at how much you're going to be collecting. You're probably not going to be collecting a lot. So you're going to have to end up buying more, right? So I mean, you don't have to do the 300. You can literally, go in here and let's do it together, right? Let's do an example together. It's nothing better than hands-on learning, right? One second. Just pause my share real quick. I'll pull it up on our Thinkorswim. How about that? Okay, so let's find some tickers to sell premium, right? Somebody give me a ticker and I'll check it out. BA, Apple, Microsoft, Facebook, Nvidia. I like them all. I like them all. All right, let's start with BA. So just first of all, BA, if anyone doesn't know, this ticker, they really hate to see this ticker drop. Like seriously. They buy this thing up all the time. Anytime the stock goes on discount, they buy this thing right up. So this is actually a great choice. I like it. So let's just look at BA, right? On the daily. We're gonna look at BA on the daily chart, right? Check out BA. BA has been squeezing for a while. It's actually released from the squeeze now. Um, these key levels here, this 111, 115 area, this zone, you can say like this zone, has been a pretty critical level. Every time just about it's come to this level, it's bounced, right? So you could have literally come in here, saw BA squeezing, right? So what does that mean when a ticker is squeezing again, and we're trying to buy or sell contracts? What does that mean with the price of the ticker? I mean, it's going to be low, right? Cheaper. You can buy more of these guys. This is small account friendly and large account friendly, but definitely this is small account friendly, guys. You guys saw it only cost me like $250 to trade Tesla, right? And make almost 100% off that probability, right? How amazing is that? If you had $1,000 to put on that, you would have made $1,000 off of that, right? So BA squeezing on the daily, and I see that this is a psychological level that just keeps getting bought up, right? So why not come in there and sell those 113, 115 puts, right? And what happened? We haven't come back to touch. You could have even waited to see the bullish momentum come into BA. I mean, even before that. I mean, if you guys are watching or listening to anything with my histogram details, you can see the switch. You see the check this out, guys. You see the light blue to the blue to the red to the yellow to the light blue to the blue. You see the red, the yellow, then the switch over, right? The squeeze. Check this out. This is a good indication. What do you call this? What kind of divergence would you guys call this? What kind of divergence would you guys call that? You guys see that? Volume profile. No, I don't really use volume profile. I've did a little research on it. I tried a couple things. Pretty much just kept what worked for me. What I thought was, you know, worked best for my strategy. I know some people that do use volume profile. I'm not knocking it. Um, but yeah, this is bullish divergence, right? So just coupling all of these factors, it's giving me pretty good grade of confirmation, right? That we're probably going to head higher, and that this trade is going to work in my favor, because essentially you just want to pick a zone, an area that that ticker is not going to come back and cross, right, or close below or above. Remember, you can do this both ways. We're not just selling puts. You can sell calls as well. That's why this strategy is so lethal. Okay. Now, let's see. So BA, Apple. You guys literally just come in here and this is good. So check Apple out. Apple's in a 4-hour squeeze. What does that mean for my contracts? What does it mean for my contracts? Cheap, cheap. Yes, very low. Discount. Exactly. You guys need to be taking advantage of these opportunities, right? Check out Apple. You want to be looking at a bigger time frame because we're picking a range, right? Let me just show you this. Picking a range. Much safe to say that Apple is trading pretty much in this range, right? Can everyone agree with me on this, or does anyone disagree with me? Feel free to disagree, right? So Apple's at 320 right now. You know, let's say why not come down here and try shorting this 312 on a bounce play. I would go with the bounce play first rather than trying to go at this at break of open, right? Always look for a great entry, right? You guys want to pick up these put spreads or these call spreads when they're at their cheapest, right? So if we were to have Apple, I don't know, try to fill a gap or something, that's when you want to be looking to execute. You don't want to wait for it to rally, right? Because the contracts aren't going to be as cheap, right? Can we agree on that? Do we agree? Right. The 310, sell the 310s. 310s would be a better bet, right? You could sell the 310s, you could sell the 312s, you could even sell the 315s. Now you're going to be taking on a higher risk, probably more reward, but reward isn't always what you want to be looking for. You want to be looking for a high probable trade. And it's right now it's in a squeeze, so we're gonna have pretty cheap contracts, and it's really not moving. It's just chopping around, and we're not concerned with the chop. Look, guys, I'm taking the frustration of trading sometimes that trading can be sometimes away from you momentarily, right? You can literally set this trade, set an alert, right? And for an alert to say, hey, Apple is crossing 312 or Apple is crossing 310. Check it out just to see what's going on. Remember, it doesn't matter what it does until expiration. Apple could drop down to 303 and bounce back to 315, right? But you don't have to sit here and babysit this trade. You take the emotion. We're taking the emotion out of trading. I got another question. Let me look at some questions. So would you wait for Apple to drop a little during the day to get a better price for selling put? Yes, definitely. You always want to look for, if you're trying to sell the puts, you want to look for like a test of resistance. I mean, a test of support. Um, you know, because that's where sellers are getting trapped, right? They're trying to sell that breakdown, which is probably actually the dip is being bought, which we've been seeing. I'm not saying that's going to continue to get bought by any means. I'm just saying, just based off of historical data, I'm just going off of where we've been. Um, Another question: do you consider implied volatility before selling or not really? Do I consider implied volatility? Yeah, I consider all of that. I know that The strategies are best used in a squeeze because the expected move is lesser. So like there's not the volatility is lower. So, you don't really have to worry about these sporadic moves, right? You don't have to worry about waking up, and the next morning like a ticker being up $20. You know what I'm saying? Like it going out of your way so drastically. So like trying to do this on like a Tesla or a Amazon, you add a little bit more risk because the implied volatility is going to be a lot greater, right? Uh, but when you couple this with like a move like today, like a squeeze breakout like today, or squeeze breakouts that we've seen, I could go all day and just show you breakouts that we played, squeeze breakouts that we played, right? You could come in here all day and sell these. I mean, that's what I've done. That's what I've done in the past. IV rank, not implied volatility to sell a higher premium. Not so much. I mean, if you want to really just go, if you're really shooting for percentage move, a high probable move, just stick with the delta tens. You don't have to worry yourself with the rest. How many red dots? Here's another question. How many red dots are squeeze are decent? Like one, two red dots wouldn't cause much movement. So here's the thing. I've been watching this squeeze for a while now. And honestly, it doesn't matter if you have one dot or 10 dots. Like the move could be massive regardless, right? Um, just my preference, I like to see a ticker squeezing for like at least 4 dots. That's just my preference. That's letting me know, okay, this thing is really, sitting here, and since it's on 4 dots, and possibly I could possibly have some more room to go. But you need to check market sentiment. Don't just go jumping in there because something's squeezing, guys. That's not what we're doing here. We're we're strategically going in here, looking where the tickers are at, looking where the stock's at, looking at if it's at key level of resistance, support. Is it ranging? What is it doing, first of all? And then that'll let us know what strategy to use. Now I'm gonna go to the next strategy, and we can come back to uh, to the premium, to selling premiums. Got another question? What's your percentage of wins using this strategy? Um, I've lost maybe one put put credit spread, and I've won about 10. So I honestly should do more of these, but I don't know why. I get a thrill out of riding naked calls and naked puts and trading these breakout plays. Honestly, that's just my preference. Is pretty much why I stopped trading forex, because it just bores me. Honestly, uh, sad to say, but yeah, 90%. It's not bad, not bad, right? And it's all about finding high probable trades, right? And just to think, I mean, if you have a bullish market, this it's not all that difficult. Just common sense, really, just common sense, and just going in here, doing your due diligence, um, setting your levels, and go from there. All right, so we're gonna go back to the presentation. So this was a put spread, and the actual name, it'll be a put vertical credit spread. So if you guys are using Thinkorswim and you go up to table or you go up to strategies, it'll be a vertical spread. It'll say vertical. You're selling a vertical put spread. All right, so we're going to talk about iron condors. Like I said, I know you guys have already talked a little bit about iron condors with Kev. I just want to show you guys, when you couple this with the squeeze, you actually increase your chances. You increase your probability. You increase the probability of this trade. This strategy was great by itself, right? Now, what is an iron condor? Iron condor is essentially a wall that we are creating around a stock price. So let's go back to EA, right? Just go back to EA. I like EA on that weekly. And then we'll do some recent ones just in case you guys want to try this out or just watch and see what happens rather. So imagine we're selling these puts, these 85 puts, buying the 84 the 84 puts for hedge for protection, and you're selling the calls. You're going to sell the call side. You're going to sell the put side, right? So what happens when you sell the call side and the put side? What happens? I just said it a second ago. What happens when you do that, guys? You build a wall on both sides, exactly. Someone said, man, you should do these plays and also trade the naked calls and build a range. Exactly. Now you're seeing it. Yes. You can definitely use these strategies and you can still play the naked call, naked put and make money that way as well. Think of these as being a hedge. These are literally hedges. You could literally, this is literally a hedge. If you were selling premium, if you were saying that this stock wasn't going to go below this level, right? You have guaranteed money sitting here if it doesn't. And if the stock does happen to tank, guess what, guys? You can ride those down in puts as well and make up what you would lose here and possibly some, right? Can we all agree to agree? Or do we agree to disagree? We agree. Awesome. So Iron Condor is nothing more than us building a wall around a stock price, right? And when you couple that with a squeeze, right? Look how this thing is squeezing, right? You could have made it was squeezing for weeks, guys. These candles are weeks at an end. You could have been banking for months on EA alone. We're not going to get on how long Amazon was squeezing for, right? So another question, how to choose a proper expiration date for these spreads? I tend to go 2 weeks out. I have gone same week, just depending on the move. It just depends on the move. It's the best way I can put that. So let's say Tesla. Let's say Tesla today, right? I hate to go to Tesla, but matter of fact, let's do BA today. How many of you play BA today? Anyone play BA today? Awesome. Okay. So timing entries. So you could have literally did an iron condor on BA. Wouldn't have went with the 89. Probably would have went with the 100 marker, just because every time this thing hits 100, like anytime it hits $100, $110, they buy the dip. Like every single time. Check this out. Every single time. 1, 2, 3, 4, 5. Like they just 6. They buy it every single time, right? So you literally could have come in here just based off of those previous levels and could have sold these calls. Want to do it for me. But you could have sold these calls and you could have sold these puts. Could have sold the 113s. You could have even sold the 150s, right? The 160s. Probably would have went the 160s, right? 165. Still have yet to break that range. Still have yet to break the 160s. I tend to go 2 weeks out though, but when you get an explosive move like this, like let's say you would have caught this explosive move out of the squeeze, I probably would have did same week. Like when you're doing a stock, a ticker that's actually squeezing, I go 2 weeks out. When you're getting a break out of that squeeze, you can put on a little bit more risk, right? Put on a little bit more risk. If you're watching level two and level two is telling you that buyers or sellers are stepping in, then you can go with that. But remember, just because you're in profit, you don't have to wait for max profit, guys. Like I'm not showing you these strategies for you to try to nail max profit every single time. I'm showing you these strategies to capitalize off of the opportunity that the squeeze gives us with these consolidation moves, with these sporadic burst of momentum moves. Answer some questions. Would it make sense to incorporate the Bollinger Bands and the Kettler channels outside the outer bands? Yes, you can actually incorporate them. I was going to show you guys actually next session how I incorporate the bands and some other indicators with these strategies, because you can actually go in and use the bottom band as support, and you could sell puts below that, right? Because that's acting as a key level of support, right? That bottom band is always a key level of support. So yeah, you could actually go in and do that. But I would probably look at a bigger time frame, right? You don't want to be looking at like a 1 hour time frame and trying to sell premium. You want to look at a bigger time frame and really see where the ticker is ranging or where the ticker finds support or resistance at, and you want to go from there. Yeah, daily. So for the bigger time frames, I'm gonna type this in the chat. Looking at the weekly, the daily, the monthly, even you could even look at the 4 hour. I really wouldn't look at the hourly or like the 30-minute, the lower time frames. I wouldn't really pay attention to those. Those are just all noise, right? Let's check out another one. Let's check out Amazon. What's Amazon doing? Anyone tell me what Amazon's doing? It's ranging, right? So you can play this multiple ways, right? You can look to sell these 2186. It hasn't touched that range in a while. Anytime it's come close, they bought the dip, right? Or you could choose to even come in here and try to short these 25-25 calls and saying that basically we're not going to make higher highs. Now, might I add that Amazon is actually releasing from a squeeze on the daily. That would be a good thing to take note of, guys. I don't know if you guys are trading, but I would definitely write that down that Amazon is squeezing on the daily. So we could see some bullish momentum there. And look at here. What do we have here on the weekly? Looks kind of, let me clear some of this up. Can anyone see this pattern I'm looking at? What is that? What am I looking at? What kind of pattern is that? Ascending triangle. Yes. So what does that mean? We have an ascending triangle on the weekly. We have Amazon releasing from a squeeze on the daily. What does that mean? Yeah, it could break to the upside. So we could literally come in here and sell these puts, right? Wouldn't it be a high probable trade to even sell these 220, 2245 call puts, right? There's a high probability. This is a high probable trade, guys. Right. Bullish momentum. So I mean that's all that the iron condor is a wall. Microsoft's been, somebody mentioned Microsoft. Microsoft's been consolidating for a while. You can build a wall around it. I mean, the market itself has been, let me just pull a SPY. It's been moving, but it's still trading in the range in a way. You know, it hasn't, we've tested this 307. I'm looking to see where we go from here. I don't think that an iron condor would be the highest probable strategy for this. I would rather sell puts, right? Just because we are releasing from the daily squeeze on SPY. Check this out. No coincidence. What does that mean for SPY? Just based off charts, guys. I'm not being biased or anything. I just trade the charts. And you should too. I just trade the charts. What does that mean? Yeah. Let's check out just real quick. I just want to check SPY out on the monthly, right? Check this out, guys. What's SPY doing on the monthly? Squeezing, bullish momentum to the upside. Now, this could change. This could very well change. I'm not saying what's going to happen. I'm just saying we should be looking at high probable trades. And you should take in consideration what the squeeze is telling you, right? Let's check out another strat. This is basically showing you the iron condor. Had I sold the 300 puts and sold the 310 calls, the most I could have lost on that trade was 31 bucks, right? But check this out. The most I could have gained was $69, right? That's like a 200% return, right? Crazy. So you have the straddle. Like I said, we've talked about this before, but when you incorporate this with the squeeze, you get a different animal. You get a different beast, right? Play a straddle a few times on a few different tickers. Yes, Tesla being one of them. So for the straddle, let me just go back. For the straddle, what you're looking for is you're looking to buy a in the money put in call, right? Now, why would I want to buy an in the money put or call? In call. Why would I want to do that? Why in the world would I want to do that? Yes, it's a hedge, right? Yes. We're buying a put and a call. And because it's squeezing, what does that let us do? It lets us take advantage of what? Yes, it lets us take advantage of the price. So we're essentially getting these prices for cheap, dirt cheap, right? Getting these prices for dirt cheap. And how you want to play this, I saw someone mention it. You want to play this on the breakout. So this strategy requires timing. Timing is essential. You want to make sure that you properly manage your risk, and you want to make sure that you buy the right expiration date. Now, I would go with 2 weeks out. So if you're going to go with 2 weeks out, that means that you need to watch your risk management, because if the stock is just, if the price of the tickets is just too expensive, then you need to trade something else. Don't try to pull a Hail Mary and, you know, hit a home run or by any means, don't, we're not looking for that. We're looking for high probable trades. So this would have been a perfect opportunity to come in here and grab a straddle, right? So we're going to buy basically the same price level, the put and the call, and we're using it as a hedge. So let's say that Tesla, let's say that we bought puts and calls on Tesla and it broke through this level of resistance, right? You want to know when to cut the opposite contract and let the other one ride. Now, you could very well just let it hit zero and just, hope that your call or your put outweighs the loss, which does happen. I've had a few times where I've actually let them just run, or I've held overnight, and the call or the put outweighed it so much that it ate up the losses and I received gains. Now that's not my favorite thing to do. Um, I like to try to time these. I like to use these as day trades rather, right? I don't really like to swing straddles. I like to try to use these as day trades. But when you're buying those 2 weeks out, the volatility won't affect your contracts as bad, right? The theta won't kill your profits as bad, right? It's important that you guys remember that premium decay is like one of the number one killers of your contracts, guys. That's why they're designed. We're not designed to make money in this market, but we will, right? So that's the straddle. That's how you would use the straddle strategy. And let me just pull up beyond pull up another favorite, right? What kind of pattern is this? It's a triangle, right? You could have used a straddle on this, on the break above this trend line, or the break above this key level of 135, right? Could have bought a put in the call right here at that level. And if you would have sat back and said, hey, if it breaks and level two supports, remember, level two is critical, guys, in your trading. I can't stress enough how important it is to learn level two in time and sales and read time and sales. But if the tape supports this, I'd be willing to cut my puts and let my calls ride and to take profit, probably at my next profit target, which would have been 140. And what happened? We passed 140, right? 140.80. If you would have held that call, it would have hit 144, right? You guys see how this strategy can help you, and just by you buying this in the squeeze, guys, you're getting these contracts for very dirt cheap. So right there alone is enough for you guys to pretty much profit in any direction that this market gives you, whether the market throws you sideways movements, whether the market rallies, whether the market absolutely just dumps and it breaks to the downside, you know, whatever in whichever direction this market chooses to go, you have a way to hedge against it. Yeah, this isn't this isn't like my favorite, but in times where I've been indecisive and I didn't know which way the ticker was going to go, and I know that I wanted to capitalize off of the movement. That strategy worked out best for me. So it can go your way, and there can be times where it won't go your way. But it's always great to know different types of strategies, right? Because you just never know what you're going to get into. You want to be fully equipped in this market, especially right now. Especially right now. Do you have any questions about selling premium? About the selling the puts, selling the calls, the iron condor, the straddle? I think it's pretty straightforward, pretty self-explanatory. Thank you, thank you. Yeah, I really want you guys to dive into to selling these premium guys, because that's really what I wanted to drill home to you guys, because it really doesn't get much easier than that, right? Um, you're just stacking probability in your favor. That's how you guys should be looking at trading from here on out. Is just aiming for high probable trades, and this is going to allow you to grow a small account or a large account. It'll also provide a way for you to make money on the side. Start generating that consistent income to do whatever. I mean, like, how many of you wouldn't mind having extra $200-300 a week to pay a bill or to do whatever, right? Show of hands, how many of us wouldn't mind 200-300 bucks easy a week? I know I would. I wouldn't mind. It makes such sense. Or it was very difficult, but it's not. Yeah, it sounds difficult uh, at first, but once it's broken down, it's really not. It's really not at all. Here's a question. So we are looking for the squeeze and the use of spreads on the 4 hour for swings. You want to take the 4 hour chart, you want to take the weekly chart, and you want to take the monthly chart into consideration. More so the 4 hour and the weekly. That's what, and the daily. The 4 hour, the daily, and the weeklies are really what you want to look for. Because remember, the bigger the time frame, the bigger the what? The bigger the time frame, the bigger the move. Yes. That's where I would be looking. I would be looking at the weekly, the dailies, the 4 hour. Answer some more questions. That's why it's best to practice these on demand before we use this live. Yes. I want you guys to, the last session, I told you guys to use on demand and to go back and to look at squeezes. Look at what happens to tickers that release from squeezes. Watch the level 2. Look at the price action. Get accustomed to seeing what happens. Get accustomed to seeing how the histogram bars light up and how they fire when a stock breaches a certain level, right? Get accustomed to training your eyes to see that so that you'll know what may come next. What may come next. Another question. Do you know if any service provide levels for any ticker? Do you know if exists any service provide levels for tickers? Can you, Carlos, can you write that again for me? By yourself. I notice you have a YouTube channel and you post these too. I'll follow you there too. Thank you. Yeah. Be sure to check out Kev's YouTube. You can check my YouTube out. We got some great material there. Kev's actually been posting a couple videos these last couple days. So I don't know if you guys have looked at those yet, but he got some gems on there. Please be sure to check those out. Yeah. That's a must. Like before you even, you know, decide to go even place a trade, you need to go look at those videos first, guys. It's critical. It's critical to your learning. All right. What other questions do we have? Can you explain Delta 10 again? Yes. So let me just pull this up real quick. Okay. So, like I said, there's actually an algorithm that they've made right here. See this puts, go to puts, prob OTM. You're going to go to option, theoreticals, and Greeks. You're going to go to probability out of the money, right? So this delta 10, I have an 88% chance that this thing is going to expire worthless. You see that? Somebody said, "Do you look at level two if you swing?" I don't typically look at level two when swinging. Now, I will look at I will check level two to see if a ticker holds a certain price point, and I may jump into calls or puts depending on what level two tells me at that point. So yeah, in a way, you can use level two to pick an entry point, so to speak, right? If you're looking to swing, but you don't really know when to get in, and let's say a stock breaks a certain level or it bounces off a certain level and level two supports that buyers are stepping in or sellers are stepping in, then that can help you determine whether or not you want to swing, right? If you look at the tape and you see that you got 50,000 shares of Apple being sold, back to back, right? It's pretty. That's not small business, right? That's a lot of money, right? Or like, I don't know, like 100 million shares being sold. Like that's a lot of money. You want to pay attention to that. You want to look at the tape, and you want the tape to agree with your game plan. Do you use probability out the money and open interest when going deep out the money? And can we utilize sweeps into this? I'm being honest with you. I don't trade out the money contracts all that much. If I do trade out the money contract, I'm really trading a momentum play. It's going to be like maybe a trade that I wasn't too sure about, so I don't want to risk too much capital, and I'm expecting a big move, right? I'm expecting a big move, but I don't want to risk the capital per se on the move, right? So I may buy a out the money call or put, and let's say I do get the move because like today, I bought an out of the money Tesla call, right? Well, for one, they're pretty expensive, and two, I really wasn't paying attention to the charts, right? I saw it break a level, and I said, okay, I'm gonna buy an out of the money call, and I'm gonna literally let this thing shoot up for maybe a minute, 2 minutes. I just wanted to scalp it, and I think I scored like 27, 28% in like 1 minute, like one candle, literally, and I was out. Now, had I done that with in the money, then yeah, I would have been up a lot more, but wasn't looking for that. Uh, yes, you can use. Got a lot of questions here. Yes, you can use sweeps. You can use flow. You can use all of that incorporated with these spreads. Let's say that you like Tesla, for instance. We've had sweeps come in on Tesla for like 2 weeks now. People buying those 820s, people buying those 900s, people buying those 860s. So yeah, you can go in and you can see people buying those up, and you can look at open interest and see where people are stacking their chips, and you can actually, in a way, use that as a level. I would definitely go back to your chart and see are the price level that they're buying at or selling at, does that support a level that's on your chart, right? Like what's going on with this certain level? What's the psychological level importance with this certain level, right? You want to do your due diligence. Don't just hop into the trades because you see somebody buying a million shares of something, right? Do you post your signals each morning when you get on Zoom with bro? Every now and then I'll go in and post in the chat signals. But Kevin has amazing signals though. So me and him pretty much like we trade a lot of the same things. It's crazy. I'll be looking at where I may signal something and he signals something and it's like around the same time. So you know what they say, great minds think alike. So I mean if you're part of TCX, which you are if you're in this webinar, then I mean you got all that you need, honestly. But yeah, isn't level two more like scalping, trading? You can definitely use level two to scalp. I use level two to scalp every day. You can also think of delta as probability and percentage of expiring in the money. Okay. Do you trade Bitcoin? I'm not a Bitcoin trader. I don't frequently trade Bitcoin. Here's another question. If you know a third party or a service provider, can you give levels by ticker period or no matter what you need to do that for all your watch lists? You need to do that with all your watch lists. Oh, right on, Carlos. Right on. Here's a question. Do you ever cut losses on spreads if you feel like it's going your way, or if it's not going your way, or let it expire to whatever? I got a rule that every Friday, like on a swing account, I do this for my swing accounts. If I'm swinging something and by that Friday it's not where it should be, I just cut it. I just cut my losses. I position myself well enough where each trade that I put on won't hurt me, right? Because I'm using proper risk management. And I just know, just based off of just historical data on how I trade, that I typically win more than I lose, right? And so my wins outweigh those losses. As long as you cut those losses quickly, then they outweigh them. So even when I'm trading on my swing accounts, if I'm down, it's not going to be like drastic because I'm not putting a lot of capital on, right? I mean, like you could literally grow a small amount of money into a lot of money, especially using options. Like it doesn't take that much. So why risk that much, especially when swinging? There's no need, there's no point. Unrelated question, but is the next class our last? No, it's not. What happens at expiration? Do you need to exercise the bulk call or you don't wait till expiration? Yeah, I typically don't wait till expiration. Like I say, there's no need to try to hold on for max profit, guys. Never seen a man go broke taking profit. Please, please, please promise me one thing when you guys leave here tonight, and that is that you will not sit there waiting idly trying to collect max profit off of these strategies. There's no need. Every day in the market, there's new opportunity for you to profit. Okay. These strategies here, along with the rest of the strategies that you guys have been learning, will honestly prepare you for just about anything. Like literally any and everything that we've seen, we're really throwing at you guys. Like seriously, we're giving it to you. So absorb this knowledge in, and don't rush your process. Don't rush the process. Don't walk out of here thinking that you're going to be rich the next month, next week. Take your time. Now, it may very well could happen. Now, I'm not saying that some of you guys aren't going to excel and, you know, go be above and beyond, but that doesn't need to be your mindset, right? Growth and trading well. You guys just want to trade well. If you just trade well and you utilize these strategies, you guys will do fine. Say, bro, you're a genius. LOL. Who was your mentor? Just wondering. LOL. You or did you learn off of YouTube? So a lot of the stuff that I learned, I was self-taught. Um, but I had some like silent mentors, like people that I never really have spoken with. One of them being Umar. Um, I had like Nick, who was out also with Stock Market Labs. I actually spoke with Nick a few times, and he actually we did a couple Zooms, and he would show me some stuff like level two. He actually taught me level two for the first time. Uh, and I trade a lot with Kev. Kev showed me a lot of stuff. So I mean, like I say, you guys are literally getting the best knowledge that I think you guys could possibly get, especially for the deal. Like there's no doubting that. We're literally giving you everything that we got. But it's been almost 2 hours here, guys. Just about 5 minutes till. If you guys would do me a favor and please, please, please comment in the chat if you guys enjoyed tonight's uh, session. Let me know how everything went. Let me know if you learned anything new tonight. Um, if there's anything I can help you with, please, I greatly appreciate that. Let Kev know what you guys learned. You know, if you enjoyed yourselves, I would greatly appreciate that, guys. Until next time, I hope you guys stay safe.